Hi everyone, a very good afternoon to each one of you. It's extremely a pleasure to welcome you for this 51st session of Zen Tax Talks, where we are going to be discussing on a very important, interesting topic relating to GSTR-9 and 9C. So we will get the session started in another 2 to 3 minutes. So we have had a very phenomenal registration. We have more than 450 people for this webinar. So we will get the session started in just a few minutes time. Please keep waiting. Thank you for your patience. Thank you. Hi everyone. Once again, a very good afternoon to each one of you. So it's extremely a pleasure to welcome each one of you to this 51st edition of Zen Tax Talks. Every week we have been having a separate dedicated session on GST led by our expert team. And this 51st session is extremely very special session where we have more than 450 participants, almost 480 people over here for this 51st edition, where we discuss on a very interesting, important topic in a very timely basis about GSTR-9 and GSTR-9C. So I am sure each one of you are well aware that the due date for filing GSTR-9 and 9C is 31st of December 2024 for the financial year 23-24. So GSTR-9 is the annual return and GSTR-9C is the reconciliation statement to throw more light and also on the practical aspects of this very important compliance. We have with us our expert team speaker, CA Divya Prabha, who will take us through the nuances and the clause-by-clause aspects of GSTR-9 and 9C. So as a at the beginning of this session, whether at all GSTR-9 and 9C is an important compliance. Yes, GSTR-9 and the filing of GSTR-9C as applicable is an important compliance for the reason that if at all there was anything missed during the filing of GSTR-1 or 3B, this is the final chance for the taxpayer to voluntarily disclose such transactions to the department. Why is it important to make proper disclosure of transactions to the department? As many of you would be well aware, because we have covered this in our previous sessions also, when it comes to issuance of notices, as far as the time limit is concerned, with regard to the financial year 23-24 or up to the financial year 23-24, we have two important sections for issuance of notices. One is section 73, the one is under section 74. Section 74 covers situations of fraud, willful misstatement, or suppression of facts. If at all there is any issuance of willful misstatement or suppression of fact, the time limit for issuance of the notices is covered under the provisions of section 74, which is up to a period of 5 years from the due date of filing annual return. And more so, if the case is covered under section 74, the maximum penalty could be up to 100% of the tax amount. But if there is no willful misstatement, no suppression of facts, then the time limit for issuance of notices is restricted to 3 years from the due date of annual return, and also the penalty is restricted to 10% of the tax amount. Therefore, GSTR-9 and 9C is a very important compliance from a taxpayer's perspective. And also, is it so simple? Is GSTR-9 and 9C so simple that you can just total the values as per GSTR-1 and or your GSTR-3B and you can just comply with it? I would definitely not take that risk, for the reason that today, with the amendments made in the form of GSTR-9 and 9C, particularly with respect to the financial year 23-24, there have been as many as 26 amendments to the form GSTR-9 alone. 26 amendments that have been made to form GSTR-9 alone, and therefore it is extremely very important that we understand the nuances of the form GSTR-9, the nuances of form GSTR-9C, and proper disclosure is made in the forms GSTR-9 and 9C. So that is the significance of GSTR-9 and 9C. And here we have our expert speakers here, Divya Prabha, who will take us through these nuances of GSTR-9 and 9C. So after which we will immediately have a selected number of questions and answers, considering the time and the huge participation that we have during this session. So we will have to organize the questions and handle it in a very methodical manner. I hope participants do understand the value of time, and therefore we will organize the questions such that it is not repetitive and there is value for all the participants. So we once again thank each one of you for participating with us and being with us in such huge numbers and the confidence that you have imposed on us. So over to Divya Prabha for the 51st session of Zentax Talks on GSTR-9 and 9C.
Thank you for the introduction, sir. So good afternoon, everybody. Welcome to the 51st session of Zentax Talks. So I would like to start the session by thanking you all once again for participating in this session as well as all our previous session, and giving us an overwhelming response and feedback on all our sessions. So as you all know, today's topic is GSTR-9 and 9C, and we are very well aware that the due date is on 31st December 2024, just 3 weeks away. And we found it important to have this session at this week as it is the need of the hour. So as highlighted and rightly pointed out by sir in the introductory session, that GSTR-9 helps you in rectifying your mistakes that you've committed in GSTR-1 and 3B. This can only very well be understood with an example, which is not just an example, it is also a case law, which was the Calcutta High Court had passed a judgment on this. A taxpayer was there, he had output tax liability under cess and input tax credit under cess, but he failed to report these transactions in his monthly returns, that is 1 and 3B. However, he found the mistake and he made the declaration in his GSTR-9 and filed his GSTR-9 well within due date. But as you all know, since he did not declare his ITC in his monthly GSTR-3Bs, he was issued a notice and subsequently an order stating he was not eligible to claim such ITC as it was not declared in his GSTR-3B within the time limits. And he is also supposed to pay the tax on such output tax liability. So now this issue went on to the High Court. What was the judgment? The judgment was passed on the following grounds: that the taxpayer has filed his GSTR-9 well within his due date, and his ITC and output tax liability was pre-existing, and the ITC was also reflected in his GSTR-2As. So two main things to be noted here is filing GSTR-9 with correct numbers by correcting his mistakes that was done in monthly returns and declaring it in his GSTR-9 brought out the transparency of his transactions and also allowed the court to pass a judgment in favor of the taxpayer. So this only highlights how important GSTR-9 is as a form to the taxpayer. Not just that, as at Zentax we deal with notices, orders, and etc. We provide solutions for GST litigations. It is only important to highlight the following issues which are frequently arising in almost all the notices and orders that we are looking into. So the issues could be from for the differences of GSTR-9 versus 3B, GSTR-9 versus GSTR-1, GSTR-9 versus 2A or 2B, tax payable was whatever tax you have paid, HS and summary of all the outward supplies and whatever you've declared in the tables of GSTR-9, and RCM tax paid versus RCM ITC claimed. So these issues, why do they arise? See, filing GSTR-9 within due date is important, but it is also important to file with the correct numbers and the accurate numbers. That will help you in avoiding not only just penalties and late fees, but it will also help you in avoiding litigation. Now that you've understood why filing GSTR-9 within due date and with correct numbers are important, let's move on to the next session of understanding who is required to file GSTR-9 and 9C. So section 44 of the Act says annual return, that is GSTR-9, is required to be filed by every registered person whose aggregate turnover exceeds 2 crore during the financial year. So by every registered person, section 44 also means other than input service distributor, casual taxable person and non-resident taxable person. Now the term aggregate turnover is very important. We'll discuss that, touch upon that in the next slide. Now GSTR-9C, coming to GSTR-9C, which is the self-certified reconciliation statement. Why is it called self-certified? Initially, GSTR-9C was a reconciliation statement certified by the chartered accountants, and now there is no more need for the same. So a taxpayer is self-certifying the reconciliation statement and filing it. And who is supposed to file GSTR-9C? Every taxpayer, every registered person as given in as applicable to GSTR-9, whose turnover exceeds 5 crores during the financial year is liable to file GSTR-9C. Now let us understand this with the examples in the table on the screen. So your aggregate turnover of financial year 23-24 is up to 2 crores. Are you required to file 9? No, you are not required to file 9. However, can you file 9? Yes, you can file 9 voluntarily. You are not mandatorily required to file 9. What about 9C? 9C is not applicable for such taxpayers whose turnovers are up to 2 crores. Now, for a taxpayer whose aggregate turnover is above 2 crores but up to 5 crores, are they required to file 9 and 9C? 9, yes, mandatorily they are required to file 9 because their turnover has exceeded 2 crores as provided in section 44. However, 9C is still not applicable for such taxpayer as the aggregate turnover is less than 5 crores. Now, what about the taxpayer whose turnover, aggregate turnover has exceeded 5 crores? They are mandatorily required to file both 9 and 9C. So, hope this has made it clear that how to ascertain the applicability of 9 and 9C for a particular taxpayer. Now that we have seen the term aggregate turnover repeatedly in the previous slide, what do you mean by aggregate turnover? Section 2, clause 6 of the GST Act gives you the meaning of aggregate turnover. And how does it say it should be calculated? It should be calculated on the basis of PAN. Let us understand this with an example. Let's say a taxpayer is registered under GST in 3 or 4 states, that is more than one state. He has 3 to 4 different GST registrations. However, he has one single PAN. Now, how do you, in all of these, each of these states, different states, his aggregate turnover is less than 2 crores. But however, if you take up the sum of all these GSTINs under a single PAN, it exceeds 2 crores. Are you required to file 9? Yes, the taxpayer will be required to file 9 as the aggregate turnover should be based on PAN. Now we have decided that the aggregate turnover should be based on PAN. What is this aggregate turnover? Do you take it on the basis of GSTR-1 filed in all the states, or 3B filed in all the states, or your income tax return, or your books of accounts? However, here caution should be exercised because section 2 clause 6 also says what comes under aggregate turnover to ascertain the liability. So it mentions all taxable supplies, exempt supplies, and other supplies mentioned, but it excludes inward supplies liable to RCM and the taxes paid such as CGST, SGST. So the aggregate turnover should be calculated on this basis. That is, for every GSTIN, take your supplies based on this definition under section 2 clause 6 and arrive at the aggregate turnover. Now that we've established how to find if I have to file 9 or 9C, when do I have to file it? For 9 and 9C, the due date is 31st December following the financial year. So for financial year 23-24, the due date is 31st December 2024, which is only 3 weeks away. Now you might have a doubt. Okay, you have given the due date. However, can I file it beyond the due date? You can file it beyond after the due date. However, it will not be allowed after the expiry of 3 years from the due date. Say, for example, for financial year 22-23, the due date is 31st December 2023. You have not filed your GSTR-9. Can you go ahead and file it now? Yes, you can go ahead and file it now, provided that the period of 3 years from the due date has not expired. Now, if at all you're filing it late, will you be liable to pay any late fee or any penalty? Yes, you will be liable to pay late fees as per according to your aggregate turnover. In before amendment, the late fees for all late filing was rupees 200 per day. That is CGST 100, SGST 100 per day, subject to a maximum of 0.5% of turnover in state or union territory. Note that it is in the state or union territory, not the aggregate turnover that we use for ascertaining the applicability of 9 and 9C. However, after the amendment, if you look at the late fee liabilities up to 5 crores, if you're see here, now you have to look at the turnover as per aggregate turnover to ascertain the late fee. But the late fee would be subject to turnover within the state. So if you have aggregate turnover of up to 5 crores, your late fee would be rupees 50 per day, subject to a maximum of 0.04% of turnover in the state or union territory. Now, if your turnover is above 5 crores but below 20 crores, it would be 100 per day, subject to a maximum of 0.04% of turnover in state or union territory. If it is above 20 crore, there is no change from the old late fee calculations. That is, your late fee is going to be 200 rupees per day, subject to a maximum of 0.5% of turnover in the state or union territory. Now we've looked at late fee. What about penalty? See, your penalty for not filing 9 and 9C can go up to 50,000. So let's say you filed your 9C well within due date, and you have there is no late fee, no penalty. However, you've not declared proper correct amounts or accurate figures. Will you be liable to any late fee or any penalty due to this? Yes, you will be liable to pay rupees 10,000 or tax evaded, whichever is higher. So note the point, whichever is higher. If your tax evaded is in lakhs, you are supposed to pay such amount as a consequence of not filing proper amounts. So now that we've seen the applicability, the due date, let's look into some factors that you have to keep in mind while filing GSTR-9 and 9C. And in GSTR-9 and 9C, your tax paid cannot be changed. That is, you would have paid taxes in all your monthly returns, GSTR-3Bs. That amount cannot be changed. However, your tax payable can be changed, which we'll discuss in the upcoming slides. Now, this tax payable will be calculated on the taxable value. Just to give you an example, if at all you have not declared any supplies, let's say you have a few invoices at the end of March, you have not declared it in your March returns, 3B returns or 1, you have the option to show it in your GSTR-9 and pay taxes on such supplies. That is allowed. But how do you pay taxes on that supplies? It's not as simple as GSTR-3B. You have to pay taxes through DRC-03. Now your question would be, fine, I have not declared any tax, some tax liability, I'll pay tax on them. But I also have ITC which is left unclaimed at the end of the financial year. Will I be able to claim it? No, in your GSTR-9 return, you do not have the option to claim excess ITC. Why is it so? See, you can avail or utilize ITC. You can utilize ITC only when it's reflected in your electronic credit ledger. How does it go to your electronic credit ledger? You have to show the ITC amounts in your GSTR-3B, and through your GSTR-3B, the amount ITC goes to your electronic credit ledger. However, there is no such option to transfer your ITC to your electronic credit ledger through GSTR-9. And also, you have to keep in mind the time limits for claiming ITC, such as the 30th November following the financial year being the last date. So for all such reasons, you won't be able to claim excess ITC in your GSTR-9. Now you might say, okay, since you've told me, if at all I've missed any supplies, I can show it in my 9 and file and pay tax on the same. However, what if I've not filed my GSTR-1 and 3B for 2-3 months? I've not shown my output tax liability. You've told me I can't claim my ITC, fine. However, can I show my output tax liability in 9 for the months that I've not filed my 1 and 3B and pay tax? You cannot. You cannot file GSTR-9 unless you file GSTR-1 and 3B for the whole financial year 22-23. Now, while filing GSTR-9, if at all you're modifying any cells and the cell turns red, don't worry. It's just a highlight. It's just to highlight that from the auto-populated data of GSTR-9, you have made modifications of plus or minus 20%. So those cells would be highlighted in red. Now, we have mentioned that GSTR-9 is an option to rectify your mistakes that you made throughout the year in your monthly returns. However, if at all you make a mistake in GSTR-9, can you change it? You cannot. GSTR-9 cannot be revised. So keep in mind, it has to be filed only once, and it has to be filed with the final numbers, accurate numbers. So can GSTR-9C be uploaded before filing 9, or can it be filed before filing 9? It cannot be. GSTR-9C can only be filed after GSTR-9 is filed. And you also cannot file GSTR-9C online. It can only be downloaded as an offline utility, and the data filled in it and then uploaded into the portal. So we have attached a screenshot to guide you on where to download the GSTR-9C offline tool. Please have a look at it. You go to the download section in the GSTR portal, and then under the offline tools option, you download your GSTR-9C offline tool. So we have seen the factors to be considered and everything, but this time, since as sir mentioned, there are so many amendments in 9 and 9C, and these three are the most important amendments that a taxpayer has to keep in mind. So the amendments has happened in table 4G1, 5C1, and table 8A. Now, what does 4G1 say? As we all know, as per section 9.5, any supplies made through an e-commerce operator, that is the supplies mentioned under section 9 subsection 5, those supplies, if at all is made through an e-commerce operator, the e-commerce operator is liable to pay tax on such supplies. Now, what are such supplies? One is your transportation of passengers. Another is your accommodation services. The third is your housekeeping services. And the fourth is your restaurant services. So for all these services, the e-commerce operator will be liable to pay GST. Now 4G1 states that supplies on which e-commerce operator is required to pay tax as per section 9.5 is to be reported. For table 5C1 states that supplies on which tax is to be paid by the e-commerce operators as per section 9. So what is the difference between these two tables? Under table 4G1, the e-commerce operator is to report the supplies made through him on which he has paid the taxes. Now under 5C1, the supplier who has made supplies through the e-commerce operator, he should declare the amount of supplies made through such e-commerce operator. So 4G1 is for the e-commerce operator, 5C1 is for the supplier. Now what is table 8A? Okay, table 8A initially or till now has been a consolidated number of ITC as per GSTR-2A. However, it is not going to be GSTR-2A from now on. It's going to be ITC as per GSTR-2B. So these are the amendments. So as we saw, these are the amendments. If you had not known, if you had not known about table 8A, you would have surely made a mistake. And the Zentax Solutions, Zentax Clinic is here to help you with your amendments and latest updates. And we have our WhatsApp channel where we post regular updates on all the latest amendments, changes, circulars, notifications, and we also have other social media handles where we post such amendments. Please make sure to scan the QR code and follow us on our WhatsApp channel to keep to be updated on the latest facts on GST. So please go ahead and scan it. I'll wait for 5 seconds. Okay, let's move on to the next topic. Okay, now we've seen, okay, GSTR-9, 9C, the importance, the applicability, the due dates, the factors. We've considered all those things. Where do you get the data? You get the data from your annual GSTR-1 or annual GSTR-3B. That is your consolidated 1 and 3B, which would be available in your GSTR-9 page. Now, tax liabilities and ITC comparison sheet, which is also available in your GSTR portal itself. Then the system generated GSTR-9C. Provided you have your books, your 1, your 3B is perfectly matching, your system generated 9 can very well be kept and filed. But if it's not matching, you can use the system generated 9 to refer and upload the correct data. But please make sure that your data is matching. Now next is table 8A. Table 8A would also be available in the GSTR-9 page itself at the top. Then please, you can also use ledgers such as liability ledger, credit credit reversal and reclaim statement, and etc. Now that we've looked at where to get the data from, it is also important I have to mention the documents that you have to maintain. Please ensure to maintain bill by bill detail of all your outward supplies for both goods and services. your inward supplies, please maintain the invoices for in your inward supplies, because as per section 16, you need to follow few conditions to be able to claim ITC. Please maintain a record of all your stock to prove you've actually received the goods and claimed ITC on the same. And please ensure to maintain your e-way bills, e-invoices, your details of RCM tax paid, RCM credit availed, and your ITC claimed, reversed, reclaimed. Have separate details, separate documents for all these details to make it easy to file 9, and also to help you in your, if at all, unfortunately, you face any litigation issues on this, it would be helpful if you have documentary evidences to prove your claim of ITC and your payment of output tax liabilities. Also, make sure to maintain your audited financial statements. And if you have branches, or if you have different business operating from different states or different businesses, please make sure to maintain branch-wise or business-wise books of accounts. Okay, now that we've seen what documents are to be maintained, where can you get the data from? Where do you start from? Like, where do you start 9 from? Do you take 1? Do you start it based on 1? Do you start it based on 3B? You should start it from the amounts as per books. Why so? If you look at the GSTR-9, it says details of outward and inward supplies made during the year. Initially, it was declared in the returns. So declared in the returns means it was reported in GSTR-1 and 3B, and it was just a summation of all these declarations. However, right now it says outward and inward supplies made during the year, which means it is as per your books. Now you take up your books, ascertain the total output tax liability or the ITC you have availed. Now take up your 1 and 3B, ascertain the tax paid and the ITC claimed. And if at all you have any tax payable, or if you have any ITC that has to be reversed, do it through DRC 03. You might question as to why is GSTR 1 or 3B not to be relied upon for starting to fill the GSTR 9. See, GSTR 1 and 3B, there is a chance that you could have missed out on reporting any supplies, or you could have claimed excess credit. And 3B for the specific reason that 3B is a mixture of 3 years, right? So for the financial year 22-23, the ITC of such financial year, you can claim it till 30th November of 2023. So in the GSTR 3B returns of April 23 to November 23, you would have data of 22-23 also in your GSTR 3B returns. Now the financial year 23-24, you have the option to claim ITC till 30th November 2024. So the details of 23-24 would be reflected in the 3B of April 24 to November 24. So 3B is not advisable to be relied upon. So it's advisable to go as per your books. Okay, now that we've seen many technical details on how to go about filing your 9, let us look at the practical aspects, that is the parts of GSTR 9. Now GSTR 9 starts with part 1, which asks for your basic details. You have to fill in your financial year, and the other details are pretty much auto-populated. So it's as simple as that. Let's go to part 2, details of outward supplies and inward supplies. So part 2, table 4. Table 4 talks about details of supplies on which tax is payable. And table 5 is for supplies on which tax is not payable. Let's look at each table. 4A is supplies made to unregistered persons. 4B is supplies made to registered persons. Now 4C is zero rated supplies, exports on payment of tax except supplies to SEZ. Except supplies to SEZ because it's following in the next table, that is 4D. It says supplies to SEZ on payment of tax. Why do you have 4C and D? Because you have the option, you have 2 options when you're exporting. You can export without payment of tax by giving a letter of undertaking, or you can export with payment of tax and later on file your shipping bill and get a refund of the same. So if at all you're paying tax on your exports, you are supposed to declare the numbers in your 4C and 4D. Now 4E, what is deemed exports? So deemed exports means the goods have not left the Indian territory, but still it would be considered deemed exports. For example, supplies made to export-oriented units, supplies made against advance authorization, supply of gold by banks against advance authorization, supplies to export promotion capital goods councils. So supplies of that sorts would have to be reported under table 4E. Now coming to table 4F, which is advances on which tax has been paid but invoices has not been issued. Now under GST, while it was introduced, advances on goods and services both were required to be paid. But from October 2017, only advances or services are required to be paid. Now, for example, you are receiving an advance of 1 lakh, and for ease of understanding, let's say you're paying 18% on 1 lakh, 18,000, you paid GST. If at all you have raised invoice during the year, it would automatically go to 4A or 4B according to the recipient. However, you've not yet raised an invoice. So that 1 lakh and the 18,000 would have to be reported under 4F. Now, let's come to 4G. What is 4G? 4G is inward supplies on which tax is to be paid on reverse charge basis. Now, reverse charge basis, as we all know, we to quote few examples, RCM paid on GTA services, on sponsorship services, on so services like this as given under notification 13/2017. So inward supplies on which tax is to be paid on reverse charge basis will have to be reported here. Now 4G1, as we saw in the earlier slides, that this is an amendment from this financial year. It was already incorporated in the 3B returns. However, in 4G1 states, the e-commerce operator who is paying taxes on supplies made through him, the supplies should be as specified under section 9, subsection 5. So the e-commerce operator is liable to report the numbers under 4G1. Now 4H is as simple as a subtotal of A to G1 above. Now what is 4I, 4J? Let's look at it collectively. 4I and J are credit notes and debit notes issued in with respect to transactions from 4B to E. So if you look at 4B to E, it excludes 4A. 4A is supplies made to unregistered person. What does this mean? For 4A, you have to report the amount on net basis. That is, you take into account all the credit notes, all the debit notes, and only report the net numbers. For 4B, C, D, E, you can report the credit notes and debit notes under 4I and 4J. Now 4K and 4L is as simple as if at all you've had any supplies or tax declared through amendments, there is increase or decrease in supplies or tax that you've made during the year, declare it in your 4K and L. Now 4N is, so 4M is your total of I to L, that is your credit note, debit note, your supplies or tax declared through amendments. Now 4N is supplies and advances on which tax is to be paid. So these are the supplies and advances on which tax is payable. Now moving on to 4.5, as I mentioned already, this 4.5 is details of outward supplies on which tax is not payable. Table 4 is outward supplies on which tax is payable. 4.5 is outward supplies on which tax is not payable. So if you see 5A talks about zero rated supply without payment of tax. If you remember, we saw zero rated supply with payment of tax in table 4. Now without payment of tax will be declared here. Now 5B, which talks about supply to SEZs without payment of tax. As mentioned earlier, in table 4, you declared supplies made to SEZs with payment of tax, and here you're declaring without payment of tax. Now 4C is supplies on which tax is to be paid by the recipient on reverse charge basis. That is, you are not under whichever inward supply you have paid RCM, you brought it into table 4. But you have made supply and the recipient is paying reverse charge RCM, GST under RCM, that will be declared here. Your supplies on which your recipient is paying tax under RCM will be declared here. Now 5C1, as we saw in the amendment slide itself, it is the details of the supplies made by the supplier who's making supply through the e-commerce operator. That is 4G1 is e-commerce operator is liable to report the supplies that he has paid GST on. 5C1 is the supplier is liable to pay GST. Supplier is liable to report the amount on which the e-commerce operator has paid the taxes. Now coming to 5D. 5D asks for details about exempted supplies. So exempted supplies can be like basic essentials of fresh milk, curd, fresh fruits. All those supplies, if at all the taxpayer is making, will have to be declared here. Now coming to 5E, which asks for details of nil rated supplies. Nil rated supplies on which 0% tax is charged will have to be declared here. Now 5F is asking for details of non-GST supply. So non-GST supply means the supplies which are outside the ambit of GST, like petrol, alcohol, all those supplies if the taxpayer is making will be brought into 5F. Now 5G is the subtotal of A to G, that is all these supplies. Now as we saw in table 4, 5H to 5K is also asking for details of credit notes, debit notes, and the supplies made declared, that is increase or decrease in supplies through amendments. So in this from A to F, if at all you, for all these supplies, if at all you've issued any credit notes or debit notes, or you've made amendments through or there is a change in those supplies and you've declared it through amendments, you mention these amounts under these tables. Now L is the total of all these credit notes, debit notes, and the amendments. M is the tax turnover on which tax is not to be paid, that is the total, that G plus L is the total turnover on which tax is not to be paid. Now N is the turnover, total turnover, that is both your taxable supplies and your non-taxable supplies, that is both table 4 and table 5 will be the total of table 5N. So now that we've seen table 4 and 5, which talks about outward supplies, let's look at table part 3, that is details of ITC, where table 6, 7, and 8 are given. So 6 is ITC as per your 3B, 7 is ITC reversed as per your 3B, and 8 is going to be your matching of ITC of 3B with your 2B amounts. So talking about table 6, which is as per 3B, table 6 in the group B is the inward supplies other than those imports or inward supplies liable to RCM, but it includes services received from SEZ. Also make sure from B to E, there is a mention of inputs, capital goods, and input services separately. And this was the reason we mentioned maintenance of books of ITC details separately for inputs, input services, and capital goods is very essential, because you have to mention the ITC claim from capital goods mandatorily under the particular section only. However, inputs and input services, you can combine the same, but ensure, like, be cautious as to declare it under inputs and not input services. So as you see, B is of inward supplies, and the C and D is of RCM, inward supplies received from unregistered person and registered person liable to reverse charge, on which the taxpayer has paid the taxes and they are availing ITC now. Now table 6E is import of goods, and it also including supplies from SEZs. Now table F is import of services. Now table G is input tax credit received from ISD. So ISD is input service distributor. If at all you have, there is a HO, there are multiple branches, and there is a common ITC, the HO would take an ISD registration and distribute the common ITC to all its branches through the ISD registration, and the ISD registration has also been made compulsory. Now table H is the amount of ITC reclaimed under the provisions of the Act. So what do you mean by ITC reclaimed? We would have made temporary reversals in our GSTR 3B for supplies such as you would have not yet received goods but the invoice was raised. Supply of similar sorts, you are eligible for the ITC. However, due to the reasons or the restrictions in the Act, you have reversed it, temporarily reversed it. It would sit in your electronic credit statement, and whenever you are reclaiming this ITC, this has to be declared in the table 6H of your GSTR-9. Now table 6I is the subtotal of B to H. That is, so if this is the subtotal of B to H, so A is the auto-populated figure. From B to H, you are entering values, and table 6I is the subtotal of B to H. Now J is the difference of I and A, that is the auto-populated figure, and the numbers that you have declared through table 6. Essentially, there should not be auto-populated from 3B. However, if at all you have any other ITC available but not specified above, mention the same in your table 6M. Now table N would be subtotal of K to M, that is transition credit and any other ITC. Now table 6O would be your total ITC availed, that is table I plus table N. Now the you've seen the total ITC avail details. It's now time to look at the ITC reversal details. So table 7 asks for details of ITC reversed and the ineligible ITC. Table 7A is the ITC reversed as per Rule 37. Rule 37 is where you have to reverse ITC if at all you make payment to a supplier beyond 180 days. Now, what is Rule 39, which is Table 7B? Now, as per Table 7B, you are supposed to reverse ITC on the distributions from an ISD. So, what is Table 7C and 7D? As per Rule 42 and 43, let's look at it from Section 17 itself. As per Section 17, you have a provision where it states that if at all a taxpayer is making both taxable and exempted supplies, they are liable to reverse ITC to the extent of exempt supplies, common ITC on exempt supplies. Now, Rule 43 specifically gives the provisions or the mechanisms to calculate the common ITC for exempted supplies. That is the common ITC which has been used for both taxable and exempted supplies of inputs and input services. Because for capital goods, the mechanism to compute common ITC for capital goods has been given under Rule 43. So Rule 42 and 43 we have seen, and those two are very important. Please exercise caution while calculating the common ITC. Now let's go to Table 7E, which talks about ineligible ITC under Section 5. So 17.5, subsection 5. As we all know, 17.5 gives you certain credits which are blocked under GST. Let's take, for example, insurance, works contract services, and etc. So if at all you have any ineligible ITC that you have reversed, you would have made the reversal in your 3B, and you would have also declared the value of ineligible ITC in your GSTR 3B. If at all you've reversed any ineligible ITC, please declare the values of such ineligible ITC under Table 7E. Now, Table 7F and G, I don't think it's relevant right now. Table H, any other reversals. Let's take, for example, any other reversals that you make through ITC 03 for certain situations like your company is demerging and you're distributing ITC, or your taxability is you have been a taxable person, you're becoming a composition taxpayer, or you have been supplying taxable goods, but however you're supplying your goods have moved into the category of exempted supplies. So all such reasons you have to make reversals, and those reversals will be declared under Table 7H. Now Table I is the total of Table A to H, all the reversals that you've made during the year. Now what is Table J? Table J is the total of 6O. 6O is the total ITC availed, and Table 7I is the total ITC reversed. So as we all know, availed is you're entering the values in your 3B and it goes to your credit ledger. Utilization is you're using it to set off the tax payable. So whatever the amount with the ITC available for you for utilization is shown under Table 7J. Now moving to Table 8. So Table 8, as we all know, is a nightmare for taxpayers and a favorite table for all the GST officers, because as we keep seeing, I'm sure all of you would have received notices on ITC claimed as per Table 8A and the other tables, that is in your 3B, etc. So please exercise caution as to download your 8A report and look at the invoices which are being reflected and match your ITC claimed with this ITC as per GSTR 2B. Now, Table 8A, as we discussed, it is an amendment, and the data in Table 8A would be of GSTR 2B, not GSTR 2A. Please keep that in mind. Now, Table 8B is the total sum of 6B and 6H. So, let's look at what 6B and 6H is. 6B is the inward supplies that you have mentioned in Table 6. Now, 6H is the amount of ITC reclaimed. So, Table 8B is the total of inward supplies and the amount of ITC reclaimed. Now, Table 8C is the ITC on inward supplies, which is received during the financial year, but it is availed in the next financial year. That is, pertains to 23-24 only, but then you are availing it in financial year 24-25. So now what is the difference? That is table 8D is the difference between A minus B plus C. So you add the ITC that you have availed and you add the ITC that you are eligible for current financial year itself, but you've availed in the next financial year, and then you reduce this amount from the amount available in table 8A. Now table 8E is ITC available but not availed. Table 8F is ITC available but ineligible. So if you look at these two tables, there is only the option of ITC available. You don't have an option of I have claimed ITC, but it is not in table 8A. So please exercise caution while reconciling your books with GSTR 2B monthly and also while filing GSTR 9. So as we saw, table 8 is ITC available but not availed. That is, you have not availed it. Table 8F is ITC available but ineligible. So obviously your supplier, irrespective of his supply being covered under 17.5, would be filing his returns, right? His GSTR 1 returns. So those supplies, you have to exercise caution as to not claim credits on them because it is blocked under section 17, subsection 5 for you. So table 8F would have ITC on such supplies. Now table 8G is the IGST paid on import of goods. Now table 8H is the IGST claimed on such import of goods. So table 8G, you declare the value of IGST that you've paid, but table 8H, you say I avail so and so ITC. Now the difference between G and H, that is the ITC that you have paid and claimed, is given under table 8I. And table 8J is ITC available but not availed. So it should be equal to the difference in table 8I because you have paid an amount, you have claimed an amount, and obviously so that difference between these two would be the ITC available but not availed. Now table 8K is the total ITC to be lapsed in current financial year. Now this is the summation of table E, table F and table J, because table E is ITC available but not availed. Table 8 is ITC available but ineligible, and 8J is ITC available but not availed on import of goods. Now why should this be lapsed? As we saw earlier, you cannot claim the unclaimed ITC through GSTR 9. You have to claim your eligible ITC well within the time limits as prescribed in the GST Act. To put it simply, within 30th November 2024. So you would be only, the ITC remaining unclaimed would only be lapsed, and you would not be able to claim ITC on the same. Now moving to part 4 of GSTR 9, which is the details of tax paid. So part 2, you saw the output tax liabilities. Part 3, you saw the details of ITC. Part 4 is the details of tax paid. As we saw initially, the details of tax payable can be changed, but tax paid cannot be changed because tax paid is being picked up from the monthly returns, your 3B returns. Whatever you paid through cash or ITC, the details are being reflected from such returns. However, tax payable is reflected from your table 4. Whatever details you enter in your table 4 would have direct impact on your tax payable in table 9. If you have missed out any outward supplies, ensure to report it correctly in your table 4 so that you can pay the excess amount of tax payable by mentioning it in table 9 and through DRC 03. Now we saw table part 2, 3 and 4. That is the transactions which happened in financial year 23-24. So all those 3 parts were of the values that you have declared it in your 3B returns till March 2024. However, the data pertaining to 23-24, you would have declared it in April 24 to November 24 3B returns, right? So where would you disclose that data? You have part 5 of GSTR 9, which is transactions of financial year 23-24 shown in financial year 24-25. So table 10 to 14 gives the details. So 10 is the supplies or tax declared through amendments and net of debit notes. Table 11 is supplies or tax reduced through amendments, net of credit notes. These 2 are to be reported. Now table 12 and 13 are optional. It is not mandatory for you to report. However, we'll still see what it is. Table 12 is reversal of ITC availed during previous financial year. You have availed ITC in 23-24. However, you find that you are supposed to reverse it. You make reversal in the period of April 24 to November 24. So those details would come under table 12. Table 13 talks about ITC availed for the previous financial year. Now this is just the opposite. For the financial year 23-24, if at all you have any ITC, you are eligible to claim any ITC and you have availed it in your returns of April 24 to November 24, those details are to be declared here. So as I mentioned, 12 and 13 are optional. And now table 14 is differential tax paid on account of declaration in 10 and 11 above. You have, just like how we saw in part 2, 3 and 4, right? Part 2 was outward liability. Part 3 was input tax, details of input tax credit. Part 4 was your tax paid details. So here 10 and 11 are regarding your output tax liability, 12 and 13 are regarding your ITC, and 14 is regarding the tax paid on the output tax liability of 10 and 11. So this is part 5 of GSTR-9. Now moving on to part 6, that is, so part 6 has tables of 15, 16, 17, 18 and 19. Except table 17, all other tables are optional. So table 15 has the details of demands raised on the taxpayer or the refunds applied for and claimed by the taxpayer, and that is optional for the taxpayer to file the details. Now table 16 talks about 3 such supplies, which are supplies received from composition taxpayers. That is, composition taxpayers, as we all know, they issue bill of supply. So supplies received from composition taxpayers. And the second would be deemed supply as per section 143. So section 143, what is a deemed supply? The goods which are sent on inputs which are sent on job work, they have to be returned within a prescribed time limit, right? If at all it is not returned, it would be considered a deemed supply under GST Act. Now the third issue was goods sent on approval basis, but even those goods have not been returned or approved within this prescribed time limit will have to be declared in table 16. And table 16, as I mentioned, is optional. It is at the option of the taxpayer to furnish such details. Coming to table 17. Now table 17 is the HSN-wise summary of outward supplies. You should exercise utmost caution while filling this table, because this table is also one such issue which has been raised often in litigation. Your outward supplies that you've declared in your table 4 will not match with your HSN-wise summary in table 17. So please exercise caution as to reconcile your outward supplies actual value and the HSN-wise summary. Now, what is the limits of declaring the HSN-wise details? From financial year 21-22 onwards, it is mandatory for a taxpayer whose turnover is exceeding 5 crore, he has to report the HSN summary at 6-digit level. That is, the HSN code should be 6-digit code. And if at all the taxpayer turnover is less than 5 crores, then for all the B2B, not for all the supplies, for all the B2B supplies, the HSN-wise summary should be at 4-digit codes. And the UQC, that is the units, quantity and code details, are to be furnished only for the supply of goods, and the quantity is to be reported net of returns. Now, where can you rely upon for these data? If at all you, where can you rely upon for this data is the table 12 of form GSTR-1 as amended by form GSTR-1A can be used for filling these details. Now, table 18 is your HSN-wise summary of inward supplies, which is not at all mandatory. And so if it's not mandatory, you don't have to fill it up. And table 19 is the details of late fee and penalty, which is also optional. So these are the details that are to be required in GSTR-9 in total. So hope I've made the tables clear for all of you. If at all you have any queries, please post them up. We'll take it up at the end of the session. Now moving to GSTR-9C. Like we saw in GSTR-9, there are parts in GSTR-9C also. And just to give a brief, just to recollect it briefly, GSTR-9C is the self-certified reconciliation statement by the taxpayer whose aggregate turnover has exceeded 5 crores for the financial year. Now, table 9, GSTR-9C has all these 5 parts. We'll look at these parts one by one in the next few slides. Part 1 talks about the basic details, that is the financial year, GSTIN, legal name, trade name. However, an additional detail when compared to GSTR-9, which is asked here, is are you liable to audit under any act? So if at all you are liable to audit under any act, please specify the act in this table 4. Moving to part 2 of GSTR-9C, that is the turnover reconciliation from audited financial statement. So part 2, table 5 is the reconciliation of gross turnover. If you look at table 5A, it says turnover including exports as per audited financial statements for the state or union territory. But you will have a question as to, for ascertaining the liability to file 9C, we are looking at aggregate turnover based on PAN. However, for 9 and 9C, let me make it clear, the aggregate turnover, if it exceeds, you have to file 9 and 9C in all of the states, like in each of the states. If you're operating from 3 states and your turnover exceeds 5 crores, file 9 in each of the states, 3 states, also file 3 9Cs. So here the turnover should be for the state. And as mentioned clearly, our exports included in this aggregate turnover. I'm sorry, the turnover as per 5A from audited financial statements. Yes, exports are included in the turnover as per audited financial statements. Now, the next question would be, where do you get this turnover from? Should this be you have seen it is as per the audited financial statements. Should this be the GST turnover as per GST declared in the audited financial statements? No, it should be as per your, it can very well be as simple as your revenue from operations. So that could be taken as your turnover. Now your next question would be, what about my other income, such as interest received, dividend received? Where will I have to show it? You have the option to show it under table 5O, which we'll discuss in the next slide. And yes, so your revenue from operations is covered. Your other income is also covered here. Now coming to table 5B, that is unbilled revenue at the beginning of financial year is added to the turnover as per audited financial statements. Now, what does this unbilled revenue mean? As per under accounting norms, as per the revenue recognition norms, let's take for example, as per accounting standards or as per Ind AS, you are required to account for the revenue even though you've not raised an invoice. All such unbilled revenue at the beginning of the financial year has to be added. See, this can be understood easily by looking at 5H. You are reducing the unbilled revenue at the end of the financial year. Why? Because in your turnover, you would have the amount in your P&L, you would have the revenue from operations. That is, irrespective of the invoice being raised, you would recognize the revenue. However, under GST, we have certain restrictions and criteria to invoice the services or goods and pay GST on the same. If at all GST has not been paid on it, it would not be considered as turnover as per GSTR-9. So you reduce this unbilled revenue at the end of the financial year. So if at this financial year you reduce it at the end, in the next financial year you add it back, because you will recognize such turnover in your GSTR-9 also. Now coming to table 5C, we looked at unbilled revenue as per table 5B and 5H. Now 5C is unadjusted advances at the end of the financial year. In your turnover as per audited financial statements, your advances received but you've not yet provided any services would be a liability. It would not be included in your turnover. However, under GST, you pay tax on you pay GST on advances from services. So you add back this amount. You add back the unadjusted advances and at the end of the financial year to the turnover as per audited financial statements to arrive at the turnover as per GSTR-9. Now, at the opposite of the same is the table 5I, that is unadjusted advances at the beginning of the financial year has to be reduced. Now, looking at table 5D, deemed supply under schedule 1, that is supplies made without consideration such as permanent transfer of business assets, import of services from related persons, supplies supplies from distinct persons or related persons, then supply between principal and agent. All these supplies will have to be added back to the turnover, because if without consideration, you would not include this amount in your turnover as per audited financial statements. However, under GST, we have certain mechanisms to calculate GST on the same and discharge GST. So we add it back since it would be reported under your GSTR-9. Now, table 5E is the credit notes issued after the end of the financial year, but reflected in the annual return. Just like all the other adjustments, in your books, you only account those entries that happens till March 2024, right? However, under GST, under GSTR-9, you have the option of reporting the credit notes which pertains to 23-24, but you've raised it even after March 2024. So your turnover as per audited financial statements would be overstated to the extent of such credit notes which have been raised after the end of the financial year. So you reduce the same to arrive at the turnover as per GSTR-9. Now, trade discounts accounted for in the audited annual financial statement but are not permissible under GST. We all know for trade discounts, we have certain restrictions under GST for it to be eligible to be deducted from the supply, taxable value of the supply. However, in your audited financial statement, irrespective of when the trade discount was agreed upon or when it was given, you would reduce it from your taxable value. So you add back this amount if it is not permissible under GST under table 5F. Now, table 5G is turnover from April 2017 to June 2017. I don't think that has to be discussed. And the next table is table 5J. Just the opposite of what we discussed under table 5E. Credit notes accounted for in the audited annual financial statement but are not permissible under GST. This could be credit notes which was raised during the year and accounted in your books during the year, but which is not permissible under GST for various reasons. You add it back because this turnover would be understated. This credit note would be the turnover of audited financial statements would be understated to the extent of this credit note. So you add it back since it's not allowed under GST to arrive at the annual turnover as per annual return. Now, adjustments on account of supply of goods by SEZ to DTA. So, SEZ, any supply of goods made by SEZ to DTA are adjusted under table 5K. And table 5L has the details of turnover for the period under composition scheme. If you have in your audited financial statements, if you have both the normal tax paying scheme and the composition scheme income, you reduce this turnover under a composition scheme from your total turnover, because under GST, we have different treatment altogether for composition scheme taxpayers. Now, table M, N, and O are, table M is adjustments in turnover under section 15 and rules thereunder. And table N is adjustments in turnover due to foreign exchange fluctuations. So you add or reduce it based on if it's a profit or loss on foreign exchange fluctuations. And table 5O is, as we already discussed, all the other incomes like interest income, dividend received has to be reported here. Now, after all these adjustments, table 5P gives you the annual turnover after adjustments as above. And table Q is the turnover as declared in annual return. Now, table 5R is the unreconciled turnover. That is table 5Q, that is annual return minus whatever you've arrived at table 5P. Now you have, okay, so as we discussed in our previous slides under table 5, we saw that the turnover should be as per the audited financial statements. It can be as good as the revenue from operations. And what about other income? You can declare it under clause 5O. And should you report the supply, inward supplies for which you have paid GST under RCM? No, you do not have to report the same under table 5A. Now, exports, deemed exports and supplies to SEZ, is it part of the turnover to be reported under clause 5A? Yes, it is part of the turnover to be reported under clause 5A. Now, as we saw in the previous slide, table 5R is the unreconciled turnover. Now, in table 6, see, it's not just important to arrive at the difference, you should also provide the reasons for such difference in a detailed way in your GSTR-9C, and that's why it is self-certified reconciliation statement. So in table 6, you provide the reasons for unreconciled difference in your annual gross turnover. Moving to table 7, this is your reconciliation of taxable turnover. In table 5, you saw that you've taken the total turnover as per audited financial statements. It could contain exempted, nil rated, all such supplies. However, under table 7, we are reducing the values of such supplies. Exempted, nil rated, and non-GST supplies, zero rated supplies without payment of tax, and supplies on which tax is to be paid by your recipients on reverse charge basis, and arrive at the taxable value of turnover as per your audited financial statements. Now, this is then compared in table 7F with the taxable turnover as per liability declared in annual return in your GSTR-9. Now, do you have a difference between these two? That would be reflected in your table 7G. As we saw earlier, in table 8, you will give the reasons for your unreconciled difference in taxable turnover. That is, reasons for the difference mentioned in table 7G. And table 9 is the reconciliation of rate-wise tax liability and amount payable. So for all your outward supplies for the financial year, you have to provide a rate-wise segregation of the supplies and the taxes paid on such supplies. And that would then be compared with the tax paid as per GSTR-9. And if at all there is any unreconciled difference, that is as per your declaration in table 9 of 9C, and as per the tax paid in your annual return, the difference has to be explained in table 10. That is table 10, you have to state the reasons for why there is unreconciled payment of amount in your table 9 of GSTR-9C. Now table 11 is the additional amount that is to be paid but not yet paid. So what is it? You have been reporting the reasons for unreconciled turnover in your table 6, table 8 and table 10. Table 6 is the unreconciled turnover. Table 8 is the unreconciliation of taxable turnover. Table 10 is the unreconciliation of payment of amount. If at all due to any of these unreconciliations, you have to pay any amount, that would be reflected in your table 11. Now moving to the next table, next part of 9C, which is the reconciliation of ITC. We have seen the reconciliation of outward supplies in part 2 and 3, reconciliation of output supplies and the tax paid. Now in part 4, we are looking at the reconciliation of input tax credit. Now under table 12A, your ITC availed as per audited financial statements for the state or union territory. Just like how we took the turnover for the state or union territory, you also take the details of ITC availed for the state or union territory. Now, under table 12B, if at all you have booked any ITC in earlier financial years, but you've claimed it in the current financial year, you add it back. Now, in table 12C, if at all you've booked any ITC in current financial year in your books, but you've claimed it in your subsequent financial year returns, you will reduce it from your ITC as per financial statements to arrive at the ITC as per GSTR-9. So table 12B is the total, that is the table 12A plus table 12B minus table 12C. Now table 12E is the ITC claimed in annual return. The data would be picked from your annual return. Table F is the unreconciled ITC. Now table 13, as we saw for the previous tables, you have to provide reasons for why there is an unreconciled difference in your ITC claim details. So you provide such reasons. Now table 14 is the reconciliation of ITC declared in annual return. Expense wise, you can reconcile the amounts expense wise. You can reconcile the amount as per your audited financial statements and your GSTR-9 expense wise. For example, you paid so much under purchases, you paid so much under freight, you paid so much under rent. You can declare it separately under each head. However, please note that table 14 is only optional. It is optional even for this financial year. So ensure if at all you have proper figures and it's perfectly matching with your audited financial statements, go ahead and declare it. But exercise caution. Now the remaining parts of table 9C is part 4 and 5. So table 15 would be the reasons for unreconciled difference in ITC. Like you saw in table 14, right? If at all you have any unreconciled difference, declare it in table 15. Provide the reasons, detailed reason for the same. Now table 16 would be tax payable on such unreconciled difference. So as per table 13, you gave reasons for unreconciled difference in ITC. Table 15 also you've given some reasons. Are there any tax payable on the same? Yes, it would come under table 16. Now, part 5 is the additional liability due to non-reconciliation. We saw in table 11, let me go back to the slide. We saw in table 11 that additional amount payable but not paid. And table 16 is the tax payable due to unreconciled difference in ITC. If at all there is any tax payable, that would automatically be reflected in part 5, and you have to make payment of the same through a DRC 03. Now we've looked at the parts of GSTR-9C. What should you attach with your GSTR-9C? Ensure to attach your audited financial statements. And if you have any workings for all these unreconciled differences that we've been mentioning in all the previous tables, please make sure to attach the same to substantiate your reasoning behind the same. So that is it for table 9 and 9C, the practical aspects as well as the technical aspects. Hope I've made the tables very clear for all of you. If at all you have any queries, please post them in the comment section or Q&A section. We'll start taking them. As I mentioned earlier, we keep updating, we keep putting up latest updates on the GST, latest amendments, notifications, circulars. We post almost every day on the latest updates and the little info bites on GST. So ensure to follow our WhatsApp channel, subscribe to our WhatsApp channel to keep yourself updated with the latest information and news under GST. So thank you. Please post your queries.
Oh, it's been a fantastic hour. So in the last 60 minutes, we have had a very comprehensive discussion about the forms GSTR-9 and 9C. So here we take up the questions now relating to the various practical questions that has been already raised. Right. So here we start taking the questions. So the first of the questions relating to what is the eligibility for GSTR-9A. So GSTR-9A is a return to be filed with composition taxpayers, but with regard to the exemption provided for the turnover limit relating to the annual return, it is very, very clear that it provides turnover limit exemption up to ₹2 crores. Therefore, a composition dealer would generally be exempted from the requirement of annual return. But if his turnover is going to be above ₹2 crores, then he has to file GSTR-9A. So a specific question relating to a situation where an outward tax liability which was erroneously reported under CGST and SGST instead of IGST. The tax should have been paid under IGST, but they have paid the tax under CGST and SGST. And since a negative value cannot be entered, since a negative value cannot be given in the subsequent month GSTR 3B, the same has been claimed as input tax credit. Is it okay? No, definitely that is not okay. So an outward tax liability, reduction of outward tax liability has to be reported only as reduction of outward tax liability and not by claiming input tax credit. Because input tax credit is what gets credited to your electronic credit ledger, and therefore for this specific reason, the method adopted is not in line with the legal provisions. Therefore, in your GSTR-9, make sure that you net off the output tax liability and show what is the correct input tax credit eligible in the correct figure. So then we have a question relating to GSTR-9C. How do we ensure the auto-populated values? So after you file GSTR-9, you will be provided with a PDF file which gives you the values of auto-populated fields from GSTR-9, which has to be taken for GSTR-9C. Please refer the PDF file, because even if there is a paisa difference, then there would be an error reflected at the time of uploading GSTR-9C. So therefore, the auto-populated or the system-generated PDF form for GSTR-9C will be available after you file GSTR-9. So now coming to certain questions relating to the practical aspects of the form. Is it mandatory to give the breakup between input services and capital goods? The instructions to form GSTR-9 very clearly provide that capital goods needs to be provided separately, but whereas input services segregation is not mandatory. The next question is relating to the turnover of financial year 23-24, which is reflected in the GST returns of the turnover of 22-23 spillover is shown or as amended in the GST returns of financial year 23-24. To answer this specific question, we need to understand the method of reporting that was adopted in the GSTR-9 of financial year 22-23. The GSTR-9 of financial year 22-23 is already over. So in that return, how that has been handled, whether that was already shown as an amendment in table 4 or whether it was not shown as an amendment. Based on the reporting in GSTR-9 of financial year 22-23, we can take an appropriate method for the reporting of transaction in the GSTR-9 of financial year 23-24. Sales details of vehicle on which we have paid on the margin of supply. Yes, this value can be adjusted in GSTR-9C. In particularly with respect to GSTR-9C, we have an adjustment to say how to adjust based on the turnover, based on the value of supply, based on the value of supply as per section 15 or the rules thereunder. So this is a very specific provision which is contained in clause 5M of the GSTR-9C. There you can do this adjustment wherein you have paid the tax only on the margin amount.
Is it mandatory to give breakup of input and
Yes. Yes, capital goods are mandatory to be given, but input services are not mandatory. Need to explain 6H and 6M. So I will take this to be a question of GSTR-9. So GSTR-9 table 6H is the amount of ITC reclaimed other than 5B above under the provisions of the Act. So this will talk about ITC which was reversed during the financial year 22-23, but the reclaim happened during the financial year 23-24 would be coming as ITC reclaimed. But if it is reversed during the financial year 23-24 and also reclaimed during 23-24, then such value will not come to 6H, but will already form part of 6B. 6M, any other ITC availed but not specified above. If it is not anywhere covered under any of the detailed entries, then it shall come under 6M, particularly relating to reclaimed ITC, but also for which we have a separate entry. So it is for a very miscellaneous entry. Only when very specific situations it can arise. Temporary reversal as per 3B, which is declared in 4B2 of GSTR 3B, where I have to show in form GSTR 9. Temporary reversal, if at all it is made during 23-24 and the reclaim was also made during 23-24, then net off that figure and show it in 4B. If the temporary reversal was made during 23-24, but it was originally or finally claimed in 24-25, that is after April 2024, then you show that as under any other reversal. You show that as any other reversal under 7H of GSTR 9. So next question is relating to manufacturer of machines where they also have a windmill or a solar. So sir, with respect to a windmill or solar, there would be exclusively ineligible ITC, because if it is supplied to a third party, then it is an exempted supply, because electrical energy is an exempted supply, and therefore you will have to reverse that portion of ITC which is exclusively used for exempted supplies, and in addition to which there will also be some amount of common credit, say for example audit fee, which is a common credit which has to be reversed. Next, what ITC, that is whether the gross ITC or the net ITC or the reclaimed ITC, which is to be filled in GSTR 9. So with respect to this, as already answered, The net ITC relating to ITC that is availed and utilized, or particularly to say ITC which is availed during the financial year 23-24, that is the amount which has got credited to your electronic credit ledger, to be clearly mentioned in table number 6B. But ITC which is reversed, even temporary reversal, but not reclaimed during 23-24, you show it under any other reversal. You show it under any other reversal. Sir, now Sitaraman sir, specific question: if gross ITC is to be reported, then 4D shows negative figures. That, sorry, table 8D shows negative figures. If net ITC is reported, then 6B and 6J shows difference. So net ITC is only to be shown. Gross ITC cannot be shown. Gross ITC cannot be shown because this value in table 6B will be carried forward to table 8B, and therefore you cannot show the gross ITC. You need to show only the net ITC, and that is what was very beautifully explained by Divya Prabha also. There has been an amendment to the form GSTR-9. Therefore, the complete understanding of form GSTR-9 has been also changed. ITC of 22-23 taken during the financial year 23-24, you need to, if it was books, in the books also it was in 22-23, do that adjustment in GSTR-9C, not in GSTR-9. Do that adjustment in GSTR-9C. So next question is relating to import ITC. We don't have any column in table 9, table 8 relating to import ITC. Sir, as I really look at table 8 of GSTR-9, so what is getting reflected in table 8A is not import ITC. Is only the value without the import ITC. If you really read the instructions of form GSTR-9 also, then it is only a part of table 3, only a part of table 3 relating to domestic ITC that will be auto-populated into table 8A, and therefore that is also very clear. So what details usually left out in monthly returns to be declared in 9 and 9C? Sir, generally interest income, any other income is missed to be reported in GSTR-1 and 3B. Therefore, it is to be reported correctly in GSTR-9 and 9C. Any common credit reversal also needs to be properly handled in GSTR-9 and 9C. In order to correct the reconciliation of table 8, right, I assume in GSTR-9, re-avail of 180 days reversal to be shown in 6H or 6M. So ITC, that is payment not made within 180 days, you need to show that ITC under any other reversal, right? That is to be shown under any other reversal, which is table 7I, table number 7I, because that's the question to say, right? Or to re-avail, when you re-avail that ITC, how do you really show that, right? The question goes to say, how do you show that re-availed ITC? Show that re-availed ITC in 6H. Show that ITC in 6H is what would be our opinion. Can we file GSTR-9 for 23-24 without filing the GSTR-9 of the past years? Yes, you can file without filing the GSTR-9 of the past years, but without filing GSTR-1 and 3B, you cannot really do it. Where to show the past year ITC in 6B or 6M for the above equation? So past year ITC, adjust it in GSTR-9C, particularly adjust that ITC in GSTR-9C. How to compare the income tax return details with GST returns and how to rectify while filing GSTR-9 and 9C? Yes, do disclose the correct values in GSTR-9 and 9C, not the value which is auto-populated based on GSTR-1 or GSTR-3B. A supply has been wrongly declared as non-GST supply in GSTR-1. Can it be rectified as exempted supplies? Definitely it can be rectified as exempted supply in GSTR-9. Thank you, madam. Very excellent session, Divya Prabha. Very nice. Can I get a GSTR-9 and 9C optional and mandatory table list, please? Sure. Please do mail us to solutions@zentaxclinic.com. We will send you the details of the same, please. Palanivel Mahesh, we request you to send us a short mail relating regarding the same. We will definitely share you the PPT to you, Arun Kumar sir. So inputs in respect of a month of March 23 is being reflected in 23-24. GSTR-3B. How to treat the same in table 8A difference. So that ITC which is shown in 23-24 should not have been claimed because of the provisions contained in section 16(2) AA. ITC which is reflected in 24-25 of GSTR-2B can be or rightly is eligible to be claimed only during 24-25. Therefore, it ought not to have been claimed during 23-24 at all. Temporary reversal, yes, questions already answered. Any penalty for non-filing? Yes, penalty is possible for non-filing of GSTR-9. Definitely, it was explained. Penalty for late filing of GSTR-9, yes, it was explained. In audited financial statements, other income, what are the treatment in GSTR-9? Other income, whether it is taxable supply, then duly reported as B2B or B2C. If it is exempted supply, you have a separate field for exempted supply. For non-GST supply, you have a separate field. What is the difference between 6B and 8B? What is the value in 6B will be auto-populated to 8B, right? So 6B plus 6H will be the auto-populated value in table 8B, right? So ITC pertaining to 23-24, I am already availed in 22-23, but supplier reported in 2B of 23-24. Can I mention particular ITCs? ITC available but not available in table 8. So in table 8, you cannot give this reconciliation. So since you have now, there is only the adjustment for ITC reflected in 2B 8A, which is claimed in the subsequent year. But there is no field to say that I have availed it in the previous year. There is no field. So that is the structure of the form. Can we correct the auto-populated GSTR-9? Yes, you can correct the auto-populated figures. AATO is in excess of 5 crores. Then you need to file for all the states GSTR-9C. Once the aggregate annual turnover is above 5 crores, for all the states, you need to file GSTR-9C. In some tables, 8A as per GSTR-9 and 2B downloaded figure has some differences. So there are some system glitches, but definitely it has to match. Those are system glitches. Please raise a ticket in the online portal. In portal, it says we can file GSTR-9C only after filing GSTR-9. Yes, we have to file GSTR-9 and then only we can prepare GSTR-9C. Then only it will be enabled at all. But for matching, you can do that matching in Excel even before that. Right? Unnati, maybe we will connect over a call also to explain that specific question. But we can do that matching even without the filing of GSTR-9 outside the portal. Can't get you sure how to show this in GSTR-9 in other ITC reversal section. Karthikeyan sir, maybe you can mail us your query once again. Since it's past 4:30, we have to close the session very quickly now. So maybe I will recollect your question once again, but we will definitely answer your question. 3B summary is overstated due to duplicated invoices. Where do I reconcile this difference? So books and AFS show the right turnover. So in case of turnover, I don't think there should be any overstatement due to GSTR-3B. But if it is erroneous, if the auto-populated summary is erroneous, no worries. Give the correct values in GSTR-9. So again, the question, whatever was supplied as non-GST supply, as exempted supply, yes, you can correct it. As we need to consider 23-24 invoices are supplier filed later in 24-25 and claimed the same. I could not understand the question properly. In case of reversal of ITC in 3B for the purpose of ITC reclaimable, we initially reported in 4A5 and then reverse it under 4B2, and in subsequent month we claim it in 4A5, 4D1. Accordingly, gross ITC claim becomes twice of actual ITC. How should this be repeated? So this is the repetitive question. So if it is reclaimed during the year, it has to be only shown as net of figures, sir. Credit notes appear in 2A but not in 2B. Hence, it is since it is static. How to give effect, sir? Credit note. So don't show it as double time. Don't show the gross figure of ITC as the total of GSTR-3B, because in table 8, then it would be a gross erroneous figure, right? 22-23 related ITC, 23-24 where I have to show an ITC. The question is not complete. What about the treatment? About if so, we have some more questions, but since we have to really close the session by 4:30, we are constrained of time to take more questions. Please send us your questions through our WhatsApp number. So we will put our WhatsApp contact number of our support team. So you can also note it down, 89039511122. So our contact number of the support team is 89039511122. We request you to send us a mail to solutions@zentaxclinic.com. So your queries can be sent to us on email at solutions@zentaxclinic.com, and we will definitely make sure to revert to you at the earliest so that your questions are answered. So do keep following us on our WhatsApp channel, and also we hope to see you all at our upcoming sessions of GSTR-9 and 9C. We will definitely have one more session on GSTR-9 and 9C with more questions and answers. We will take we will take all your questions and also have a question answer session completely exclusively on GSTR-9 and 9C in the upcoming weeks. So stay connected, and we look forward to be always connected with you.
Thank you.
We thank each one of you for your patient participation till the very end. Thank you, everyone. Thank you.